Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is a very, very special chicken, and that chicken is Doomberg. Welcome back, Doomberg.
Jim, Ivan, really great pleasure to be here and looking forward to yet another robust discussion. Always enjoy my appearance with you guys and big fans of your work, as you know.
Well, Doomberg, you're best known for your amazing Twitter account. You're best known for your Substack that has become a must-read on Substack and Twitter. You talk about energy, you talk about commodities in general, you talk about monetary policy, all sorts of great things. And one of the things that I know is near and dear to your heart is energy. And we've seen recently there was this news coming out of Saudi Arabia that they're kind of upset with the paper market of oil. And that sort of chimes closely with a lot of complaints that our community has with silver and gold manipulation. The paper market seems to have a disconnect from the underlying physical market. And we're seeing the Saudis complain about something along the same lines. And I know you've been thinking about this. You're writing an article about this that hasn't come out yet, coming out soon, or hopefully soon. What's the problem that the Saudis are having with the paper oil market?
Mm-hmm. Yeah, so this is why you and I have gone back and forth via DM on Twitter on this topic, and it really is the convergence, I think, of the energy space and the precious metal space for two reasons. One, I noted to you as soon as I saw this headline that we interpreted the Saudi jawboning around what they're calling dysfunction in the paper markets, basically calling BS on the paper market price of WTI. And what we've seen, since Biden became so concerned about the price of gasoline at the pump and how that might affect his election prospects, we've seen the price of oil basically go straight down to $30 a barrel. Despite that decrease in the paper price, the physical market is still very tight. And in fact, we've even seen headlines out of Bloomberg where the price of oil for delivery in Asia is $8-10 above the price in the paper markets that are used to settle so many contracts. And got to thinking about the paper market manipulation hypothesis in precious metals. You would expect it would be the same set of characters putting their thumbnails on the relatively illiquid scales of the futures market in oil and driving prices down for the political benefit of the administration. And if the Saudis are in fact calling BS on this and threatening supply cuts to prove to the world what the real price of oil is, that's a really fascinating convergence between the sort of energy and precious metals. And then second to that, there has been some rumblings, and Luke Groman over at Forest for the Trees has done probably the best job of documenting this about the BRICS, British, Russia, India, China, Saudi Arabia, starting their own new currency, settling their energy transactions in that currency and truing up the differences using gold. But to do that, they believe they would have to set up their own parallel gold market where they would set the price of gold. And that price would be used to use gold as a physical settlement for, export-import imbalances. And boy, what a world it would be if we had the sort of real price of gold, as in physical delivery for the most important commodity in the world, oil, versus what the gold price might be quoted in the largely paper markets of London and New York. And so it is a truly fascinating time. And I think that the calling of the BS on the oil paper market could be one of the most important events for the gold and silver markets in the past decade.
Well, a lot of us have complained in the silver and gold investment community, why do the miners tolerate this? Why don't they band together sort of OPEC style and, withhold a little bit of silver or some other key commodity from the market? I don't think the United States could respond because many of these companies are international, so they're outside the reach of any antitrust rules of the United States or Europe. Some of the companies, they withhold, a couple 100,000 ounces here or there, but that's sort of minor. They just sort of wait for a couple bucks increase in price and then they're back selling again. But they're businesses, they got to answer to shareholders, right? Whereas maybe Saudi Arabia doesn't have that same immediate quarterly, results pressure to produce results, right? It's sort of a different animal to do that in commodities versus a national producer like Saudi Arabia.
Well, I think a real big difference too is that in the gold market and the silver market, well, gold in particular, silver somewhat less so, miners represent a very small part of the pre-existing market because gold never goes away. Whereas in the oil market, it's consumed, right? And so if you don't get the price that you want, it's not like you can hold it back. Storage is expensive compared to precious metals as well, given the technical and safety and other complexities. And so for Saudi Arabia, this is far more time sensitive and pressing for them. If they believe that they are being fleeced to the tune of $20 to $25 a barrel because of a manipulated price in the futures market, which again has very thin volume, highly illiquid, and can be pushed around with enough deep pockets. If prices are set at the margin but impact the integral, that's a very, very good investment. And so I think that's a big difference here is the miners have far less sway. And then also, of course, people truly need oil and gas every day, whereas you could probably wait a few weeks for your gold purchase if you're an investor and so on. And so it's not like gold and silver are immediate life critical inputs into the functioning of the economy in the way that oil is as well. But I think, it really, really did catch our eye. It leaped off the page. I, DM'd you immediately that this is potentially an important milestone, and we're certainly keenly interested to see how it plays out.
Yeah, I get your point that you're making there. But as the reserves come down, which we're observing on COMEX and LBMA, that what they have stored in the vault seems to be draining quickly. Maybe that'll change, but you're right. Right now at this moment, it's not the same market. In terms of the manipulation, still is far more effective in the silver and gold markets than oil. I don't know. How do you see this playing out? Do you see Saudi Arabia having the ability to push it higher just by cutting production by 1 million barrels a day?
Oh, for sure. I mean, because of the price elasticity of demand for something as critical as oil, very small, even threats of cuts. We saw tacked on $5-6 a barrel when that headline hit. But the biggest thing we're looking for is if there was going to be a oil trading regime instituted across basically half of the world's population. These are very large population centers where settlement of import-export differences would be topped off in gold. Then the next question is, what is the price of gold that is used to settle? And they could very quickly decide that the price of gold is what they say it is, and because the criticality of oil and its input into the economy is such that whatever price Putin accepts, grams of gold per barrel of oil would very quickly have to be arbitraged across the Western world, and so that's where we think if the paper suppression of price hypothesis proves to be true, this seems to be one of the most highest potential ways to demonstrate that would be to set up a separate system and see where the true price of physical gold, which is needed to settle finished goods versus primary energy imbalances in basically half of the world, what that price of gold would be in that half of the world is something that would be a fascinating experiment to run. There's a lot of things that have to happen between here and there. There would be a massive U.S. response. This would be an earth-shattering event in our view, and then that makes it unlikely that it'll happen. But it doesn't mean that you shouldn't be looking for potential milestones to such a development.
The other thing that's affecting the energy markets right now is the strategic petroleum reserve, or as the Biden administration has turned it into, the strategic election reserve. He's been dumping 1 million barrels a day. This is we used to have 700 million barrels of oil in and this is just in these storage locations in Louisiana and Texas and various places around there. And we had 700 million barrels. It's down below 500 million now. You can see this really steep decline here in 2022 to the lowest level going back to the 80s.
Jeez.
The administration's been basically it's been so politically toxic our gas prices going up to, $5, $6 a gallon, that they've just forced millions and millions of barrels onto the market out of that. It's supposed to be there for a supply crisis, and they've used it for a political crisis. But that runs out at some point. I mean, how low do they? At some point, they got to stop this, right? They can't take this to zero, right, Doomberg?
In a total coincidence, it's scheduled to stop at the end of October.
Oh, right before the election.
Yes. In fact, we've taken we put a similar chart out this morning, and we've been calling it the strategic political reserve. And you're exactly right. So what would the price of oil be without this 1 million barrels of oil per day looting of the strategic petroleum reserves for the political purposes? Now, look, I mean, I understand the temptation. I mean, just also when talking about inflation, which of course is top of mind for precious metals investors as well, the passage of the Orwellianly named Inflation Reduction Act alongside this massive giveaway on student loan debt forgiveness, which is a pure inflationary pulse of several $100 billion. This is very curious to see what the behavior will be post-election. Once you get through the midterms, then you have the 2024 re-election campaign. And so this is truly uncharted territory. Yeah, here's the chart here, and you can see.
I didn't even realize you had tweeted this today. I said something almost. I did not steal what you said. I actually made that up on my own.
That's funny.
It's one of those charts that we check regularly, and this is a 40-year chart, right? So this drop off has just been spectacular. And look, if we ever do want to rebuild this, where are those barrels of oil going to come from?
Right.
To give people some perspective, 1 million barrels a day is being released from this reserve. The U.S. total production is 12 million barrels a day. And so you're looking at, something like 8% of marginal supply versus U.S. production. Which is, of course, going to be substantially deflating of the price, given the inelasticity of demand of these products. And what happens when we can't do that anymore? And so from the Saudis' perspective, you're flooding the market with artificial supply, let's say, but also you are, if there's some monkey business going on in the futures market, this is literally the treasure of the country that is being sort of fleeced from them for $10, $20, $30 a barrel less than the natural physical price would dictate that it should be. You would be upset too if that was happening. And so we thought that and boy, what a sign of the times that Saudi Arabia, which used to be such a strong ally of the U.S., is willing to sort of punch Biden on the nose like this after having had him visit the country so recently. And another big milestone to watch, we believe, and not sure if it's going to happen. There's been mixed reporting on it, but whether President Xi of China visits Saudi Arabia in the coming week or two, I think would be another strong indicator of something bigger amiss under the surface here. And of course, the sort of mother of all geopolitical shocks would be the development of an alternative settlement mechanism for the pricing of energy that literally half of the world's population would end up using. That would be pretty historic crazy stuff. It'd be on par with the closing of the gold window as far as sort of historic geopolitical consequence.
Are you referring to the petrodollar or Saudi Arabia possibly doing oil contracts in yuan?
Well, there's some rumblings of a new currency being developed amongst the BRIC countries, Brazil, Russia, India, China, Saudi Arabia. That would be sort of a basket backed by a basket of commodities and settled in gold. And that would be a direct affront to US dollar hegemony. And not sure that it would happen. It'd probably be a trigger for a war at some point, right?
Probably.
And so that is the big thing to watch. And so if that does roll out, then I believe that is probably the best and only chance that you have to get full and final resolution to the paper suppression of price hypothesis.
The last person who tried to do that was Muammar Gaddafi in Libya. He tried to sell his oil in gold dinar, and
we know how that ended up for him.
Yeah.
Gone
now.
Okay. Let's say hypothetically something like that did happen. Who do you go to war with? I mean, it's not like they're holding back the oil. It's not like all right, Saudi Arabia is still exporting it all. What, are we going to invade them because they're not taking it in the currency we don't want them to, or do we have to just sort of bow down and start using the currency they want to accept?
Well, I mean, they could settle with us in dollars, but
Yeah.
I mean, the whole point is if you have two markets, then you have
Yeah,
arbitrage.
yeah.
And just look where the hotspots are, right? Middle East, Iran, Arabia, and
Yeah.
then in Asia, Taiwan and China. I don't think that the powers that be will relinquish the U.S. dollar hegemony without a few explosions.
Yeah.
Well, isn't that sort of what we're observing right now in Ukraine, as sort of a proxy war for that? I mean, we don't want to have a direct kinetic confrontation with Russia because that could obviously get way out of control. But hey, we're fine sending tons of information and weapons. I heard that special forces are having all their guns taken away from them so they can be shipped to Ukraine now.
What?
Yeah, they're taking a lot of active weapons and ammo from the Marines and special forces and shipping them off to Ukraine right now. So a lot of the special forces guys on Twitter were all upset about it and saying,
Wow.
there goes our training ammo for the next year that they just shipped off to Ukraine.
I think far more likely to have direct kinetic conflict in the Taiwan-China conflict if you're sort of we would have with Japan and the U.S. Navy. There would be that is a far more serious event than what's transpired so far in Europe, in our view, and we'll see. Which of course makes it less likely, and we would be the first to hope that it never happens. But that's much more scary in our view than what's transpiring in this sort of simmering conflict between Russia and Ukraine.
Well, they say to the Taiwan issue, that's what we need to watch right there is the treasury holdings of China. As those approach zero, the odds of Taiwan getting invaded increase dramatically. Would you agree with that?
Well, I would also keep a close eye on the oil shipments from the Middle East into China, right? And so for decades, the U.S. Navy has guaranteed the security of such shipments. It would be a shame if suddenly there was an outbreak of piracy or terrorism on the open sea that would disrupt the flow of.
Or if Iran shuts the Strait of Hormuz.
Yeah, exactly. So again, these flashpoints are connected, right? The Middle East and China, Taiwan, and to a lesser extent, Russia, Ukraine.
Well,
and so
that's one reason China has built up their own strategic petroleum reserve in the past couple of years. They're rapidly trying to do that, maybe perhaps in anticipation that the United States could cut off all the oil tankers coming into China very quickly if there was some sort of conflict. In fact, that's probably the strategy.
If you look at what China's been building out, massive return to coal. The world's largest build out of nuclear power, some 50 reactors under construction and another 100 under planning, which has been bullish for uranium, but also a massive multi-tens of billions of dollar commitment to replicating the chip technology that Taiwan has such a monopoly on. These aren't things you do if you're not anticipating conflict in the coming years and decades. And so to the extent that they will be successful in diversifying into their critical shortages. Energy is, of course, always and will forever be their Achilles heel because they have no oil. But if they can build up the nuclear fleet and massively re-embrace coal while they're selling us solar panels and wind turbines, they're putting their money on baseload type power and selling us intermittency. And we seem to be buying it hand over fist. This is, watch what the Chinese do, not what they say. And what they're doing right now is recommitting to nuclear and recommitting to coal.
Well, what you just said about China is building up their chip capacity. The United States, in anticipation of perhaps a conflict with Taiwan, the United States is doing the same thing. We just passed a major chip subsidy bill to try to reshore and massively subsidize our chip manufacturing here in the United States, perhaps in anticipation of some future Taiwan conflict that's probably inevitable at some point in the future.
Yeah, again, we're pretty good at design and then final assembly, but the in between, the fabrication is where we have this weakness, and Taiwan and is so strong. Both sides seem to be at a minimum behaving in a way that hedges a potential conflict. It doesn't necessarily foretell one, but both are at one generous interpretation is that both sides are prudently diversifying into critical weaknesses ahead of any potential conflict. And let's hope that's actually what's going on and not a proactive preparation for a kinetic war.
Well, even Taiwan Semiconductor seems to be preparing for Taiwan being invaded. They're building their most massive, advanced new manufacturing facility in Arizona, I think, spending something like $10 billion to diversify out of Taiwan into the United States, perhaps in the hope of surviving that type of conflict with facilities elsewhere.
And one wonders, Pelosi did meet the CEO of that company when she was
Oh,
in
yeah.
Taiwan, and so it was always a bit of a mystery as to why now and why provoke. And perhaps that again, anytime we see behavior we very completely can't understand, we often assume that there must be an important piece of information that we're missing.
Well, Nancy had to get some stock tips. That's why she went, right? She wanted to speak directly with the CEO. And
Maybe
soon after that, she sold her position in NVIDIA 1 week before NVIDIA announced disappointing earnings. So, yeah, there's something going on there.
Maybe she just wanted to distract the headlines from a certain
Right.
body footage.
Oh, the DUI. Yeah, her husband had his DUI right around the same time and was, let's risk a war with China by the speaker going to Taiwan because her husband has a DUI hearing in California. Yeah, yeah.
I find that very little credit.
That's hilarious.
It's still fun to joke about.
Yeah, yeah. Well, Doomberg, as always, you're awesome to have on. We'll put the link to your Substack and your Twitter account in the description of this video down below. And I encourage everyone to follow him on Twitter and subscribe to his Substack. I do. It's great to read.
Thanks, Jim and Ivan. Have a great week, guys.